Next one, step 4, is going to be your finance, right? Your finance. You got to raise the money. Right? So raising the money could be going to a lender, going to an SBA lender or a local lender, right? You know, like us, like we went to SBA and got the loan for the Clarksville one, right? And you know, but you can also go to local banks love storage, right? And they are in need of loans right now. I mean, banks are, you know, obviously you can see banks are desperate right now. So talk to your local, if you find a deal, right? As soon as you find it, talk to the local bank and say, look, now don't go to don't go to any of the ones that are having issues, right? Or you want to go to like a small local community, you know, Leo community bank is where you want to go to, right? Because they're the ones that will lend to you. All right. Now, when you do SBA loans are 10 or 15% down and like prime plus 1 or 2, depending on your experience. Okay. So make sure you run the numbers based on that type of a loan. If you go to a local bank, it's a conventional loan, right? So you're going to be like 20 to 30% down and be at like, you know, 6.7% interest or whatever it is right now, or 7% interest. Okay. We're running our numbers at like 25% down, 7% interest for like conventional loans. That's what we're doing right now. Okay. But you have to understand that there's like, you know, different types of loans out there and you got to run the numbers. And sometimes like SBA works better than like a local one or whatever, you know, so you have to kind of understand that concept. And then on top of that, like you can do some creative deal structuring. So that's what I'm calling that here. Creative deal structuring. So this is what I talk about: owner financing, carrying the second, you know, all kind of wraparound mortgage, wraps, contract for deed. Contract for deed, all right, wraps, and then owner financing, this kind of stuff. Okay, so that is like in the deal analyzer, in our deal analyzer, you can run numbers on like creative deal structures. And so if you like, and I'm telling you, the best way to buy deals right now is creative deal structuring. You have to understand this concept and understand what to do. The deal analyzer kind of spreads itself. I mean, it kind of like goes over that very clear. It's very easy to kind of run numbers that way. But another thing I wanted to point out is that in May, I'll be having a 2-day boot camp for my students, and it's only funding. That's it. It's all things. How do you fund storage facilities? So if you're interested in like, you know, interested in learning how to raise money and how you can buy all these, how does Stacy buy all these deals and not put any money into the deals, right? Because I'm 100% privately funded. How does Stacy do all that? I'm telling you this here. The very first deal that I've ever bought with a lender is going to be the one in Clarksville. That's the very first one. All right. But other than that, I've either done something like this, or so this one is like, you know, is like capital. It's a capital raise. Either from a private money lender, syndicating, or crowdfunding. And I've done all of these as well too. So private money, finding private monies to lend you money. Oh yeah, another thing too is partnering. Okay, finding a partner. So I've done everything here on this list. I've done it all now, right? I've done it all. So that's pretty cool. So I'm partnered, I've crowdfunded, I've syndicated, I found private money. I've done a whole bunch of creative deal structures, and I've gone to banks and got loans, right? So now, so that's really what you're going to have to learn. This is what the boot camp is about in May. So, you know, if you do not understand these things right here, you will not make it in this industry. If you do not understand this right here, how to raise money, you will not make it in the industry. Be able to buy one deal or maybe 2 deals, and then that's it, right? So you got to learn this. This is the most important thing of everything if you want to really be a commercial real estate investor, okay? Because commercial real estate is expensive. It is. It's expensive. So where are you getting $2 million, $3-4 million to buy facilities, or $1 million, or $700,000? Where do I get all this money to do that? Okay.